Many S&Ps opened the week lower, but hold above the key 3,900 level. Recall Friday we saw a big rally in equities. While we gave back a modest bit of that, we certainly did not see a retracement of Friday's rally. A lot of things happened, stronger durable goods and housing today, as well as expectations for where the market, how the rebalancing will come into play for month end, quarter end later this week. Also, the market continues to watch the tug of war between the Federal Reserve policy and expectations for growth, which right now are in opposite ends of the spectrum. The Federal Reserve is still priced to raise rates 75 basis points in July. However, the GDP Now numbers that came out today, revised GDP Now numbers, I should say, came out slightly higher, but still well below 1%. So that tug of war continues between Fed policy expectations and economic stability. Now, what does this all mean for volatility? Well, the VIX index has been holding below 30, a level at between 25 and 35 for the last several weeks. Taking a step back since April 1st, the VIX index has settled higher significantly more times than it had above 30 than it has below 20. It's only settled below 20 twice since April 1st, and that actually goes back to the first week of April. So we've been leaning towards the higher end of that range in volatility, but we haven't seen that knee-jerk push higher that we maybe have seen historically ahead of key events. Clearly, the market right now waiting for some confirmation, and volatility telling us that kind of sitting in the middle towards the higher end of the range. Lastly, what do we have tomorrow? Well, tomorrow we get consumer confidence, we get some manufacturing, we get some housing, but all eyes look to be on Wednesday's ECB panel, where we'll hear from the heads of the central banks of the ECB, the Bank of England, and yes, even our Federal Reserve. So as we kind of wait for earnings, which don't come until later in July, and FOMC and all that, we're still a ways from that. We'll have to kind of wait and give what the market, take what the market gives us, which this week will be from the heads of the central banks of Europe, England, and the United States. We see E-mini S&Ps open the week slightly lower. Don't get back what they made on Friday, as we await more data in confidence, manufacturing, and housing on Tuesday.